Time for a spotlight and some stock picks for you. So Lee Munson's with us, President and CIO, Portfolio Wealth Advisors. So I feel like after reading your notes, we are going to cover the gamut here, and I love this because you start out talking about mega caps, the triple Qs, and we think about the Magnificent Seven and more. Where do you stand on the market? So are you feeling bullish?
Well, I think how can you not feel bullish? There's nothing wrong with the economy. When I look at indicators, some of my little favorite ones, maybe let's call them a fear and greed index, things like that, they're just neutral territory. Plus, it looks like we understand what's going to happen at the election. If Trump wins, there's going to be a lot of bullish sentiment, right? So you put all this together with corporate earnings, and I think you can't not be bullish. Here's the problem, though. You have to have something else besides the Magnificent Seven to push your portfolio up. And that's why I wanted to highlight a few names that are getting NASDAQ type returns, but aren't really part of that mega cap AI trade.
Yeah, I know we're going to be talking about Deckers Outdoors. We showed the Hokas and Uggs, and those are very popular. In fact, why don't we start with that? This as we talk about retail sales, but there are certain things people love. This has been a winner over 1 year. It's up about 64%. So you do believe that consumers are going to pick and choose where they're going to be spending their money, right?
Oh, absolutely. I see all these things like, last week, Helen of Troy, sort of a staple bellwether hits the bricks. We saw Pepsi, they can't sell potato chips. Isn't that a little bit because of weight loss drugs? But really, when it comes down to it, people will buy $300 sneakers. I was just in Tokyo last month, and let me tell you, the Nike store has no line outside in Tokyo. You go in, people are mulling around. You walk around the corner in Tokyo, and there's a Hoka store, and there's just lines of Japanese consumers just waiting to buy these shoes. There's no big, Hoka is not some big experience store. We're programmed to think that only a store that does a big show can sell things. But let me tell you, I've got clients. This is just some channel checking here. It seems like half my clients come in, I look down, I'm like, oh, I notice you're wearing Hoka shoes. And they go on for 5 minutes about how it changed their life. I got a pair to go to Japan, and let me tell you, I've never had a shoe that I can walk all day and feel this comfortable. I'm not even a runner. So I think when it comes to the consumer, we can look at little things on the margin. We can hear about how Pepsi can't grow more than 4%. But when it comes down to it, people are going to pick products that change their lives. And Hoka right now is an actual product that is changing people's lives. The only people like Nike is my 12-year-old son. It's not changing his life.
I'll tell you, there's a lot of brand loyalty for the likes of Nike, for example, but the Yeezys came out and then Adidas was hot and people went back to Nike. But the Hokas, I'll tell you, Lee, my son, who's 21, said the same thing. He said, these support my feet like never before. Yeah. So I haven't tried them, but now I'm getting a lot of testaments, positive commentary about Hokas. That being said, what about Manhattan Associates, a completely different kind of company? What's the theme there? I saw a lot of positive comments from analysts over the last few months, too.
Yeah, first of all, it's like this little unknown. We all think that, nothing, it's been 674 days since a Russell 2000. It's over 670 days since a Russell 2000 hit new highs. So we're just programmed to believe that nothing small can go up. Only the mega caps can go up. Plus, Manhattan Associates, it has a funny name. Is it like the Manhattan Project? Like, what do these guys even do? But they're just supply chain management guys. They're the people who do all the logistics and the software. And yes, they do a little generative AI in helping them for e-commerce fulfillment centers. So when we're talking about Shopify, boy, that stock's been a disaster. When we're talking about all these names that people know, why not just pickaxe it a little bit? Why not look at the plumbing of how people are getting their stuff? So you take a little unknown name like Manhattan Associates that just slowly goes up. They don't even have any debt. It's an amazing company. It's an amazing story. It's got a $15 billion market cap. It would be easy for it to have a $30 or $50 billion market cap. So there's other things that compound slowly. And this is a great example of a company that, is not humble bragging about AI. Their CEO isn't saying AI, 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 but they are integrating and using generative AI in their day-to-day business, and it's helping their profits. I think it's just a layup, but again, there are things in small cap land. It's just real slim pickings at this point.
Yeah, understood. Okay, and last but not least, as far as the picks go, but I want to continue our conversation. TransDigm, it's not a cheap stock. It's over $1,200, but it's been a winner over 1 year, and you're looking at this name today. Why did it jump out at you?
Well, sometimes I go and poke around, indexes, and I look kind of like what's moving indexes. So I was looking at defense companies, and you look at Boeing, what a disaster that thing is. And I was thinking to myself, is there anything in defense land? Is there anything out there that's worthwhile? And we're always looking for a mini Berkshire Hathaway at the same time. TransDigm is a Berkshire Hathaway of aerospace. What they do, and we're always looking for a new Berkshire, right? What they do is they buy up all these little companies. By the way, I got the idea watching 60 Minutes last year. I mean, the ideas are right there in front of everybody's face. I mean, it's right there on TV if you just watch it. And they buy up all these little niche companies in aerospace. And what they're doing is they're trying to find companies that are selling parts and equipment for a plane that's going to be flying for another 30 years. So what I love about it is that they take good companies, they buy it, and then they just squeeze every dime of value at it like a little vampire. And in terms of profits, it's a very good business. Also, there's different types of moats. Buffett always talks about a brand being a moat, but I think consumers are fickle. I think what this is doing, they're saying, we're going to find a moat, not based on a brand or something like that, but on a company that provides necessary parts for a larger, say, aeroplane that's going to need those parts and can only get those parts from TransDigm for 10, 20, 30-year line. And so I just thought it was very interesting to find something like that. They compound, they make money. I'm not afraid that the stock price is high. I just love that they earn and they keep, they have a system and the system's in place. So as long as they keep executing, I'm going to stay long the stock.
All right. And so with that, what's the final thought here as we talk about the big picture? Because it's 100% likelihood the Fed will cut rates. Are you seeing multiple cuts? What are you thinking?
Not particularly. The economy's too hot. Things are going too well. If they do a little cut, I personally think it's not going to be till after the election because I think the election is part of the fundamentals. Do I really think that, oh my gosh, what if they cut September? I don't really care. I think they're going to cut once, maybe twice, a quarter point, just to let people know that they're capable of it. But at the end of the day, I will go down saying that Jerome Powell wants to see inflation really come down. We can't even get CPI under 3%. We're not even seeing a 2.9 yet. So I think while we'll get a few cuts, bottom line is the economy is doing well and there's companies making money. And AI is going to transform the profitability and productivity of industrials, of healthcare, of financial companies, what we call those old, widow and orphan value stocks. So I think it's going to be real hard for the Fed to do multiple cuts and get aggressive unless we fall into a recession. I just don't see that happening right now. We just don't have a credit shock. You can blame private credit for that phenomenon.
Lee Munson, great to chat with you and love your life-changing experience on Hoka's. It's great always to have you on the show. Lee Munson, Portfolio Wealth Advisors.